Hello everyone. Now let's see composition levy. Okay, so what happens in composition levy is that you don't pay tax as per the normal provisions of the act, but you pay tax under an alternative method. What is this alternative method? What is the logic behind it? Let me explain it to you first. Okay, so what happens is, in the normal method, the supplier has two things: the inputs, the input services, and the capital goods that he receives, and he uses it in his business basically. So what he does is he takes ITC, the input tax credit, on the same. Say for example the tax is 100, so he will take ITC of 100, and then when he makes this supply, so at the time of supply what happens, he charges the GST. So if the GST is say 120, then what he has to do is set off this credit here, right, and pay the difference of 20 rupees. Now there is a problem. The problem is that if you are a small dealer, you are of course above the threshold limit, so you are taxable, but you are still a small dealer, means your turnover is in the range of 50-60 lakhs, 70 lakhs, 80 lakhs, and if your profit margin is say 10%, so even if your turnover is 80 lakhs and the profit margin is 80 lakhs per annum, and the profit margin is 10%, means you are earning a profit of 8 lakhs. Okay, you are earning a profit of 8 lakhs. And in order to keep all these documents regarding inputs, input services, and capital goods, and then filing all these returns, the normal returns of input and output, and GST or 3B, and so on and so forth, and to keep all the other documents and records, you will need at least 1 or 2 accountants, right? And then the services of chartered accountant as well. So even if you get an accountant for say 20,000 a month or 25,000 a month, almost 2 to 3 lakh rupees is gone in the accountant's fees only. So you are earning 8 lakhs. Out of 8 lakhs, you will pay 3 lakhs to the accountant. So what will you take home? Right? So compliance cost is huge. That's the problem. In order to maintain all the records and documents and everything, you have to incur a big compliance cost. So in order to minimize this compliance cost, government has given you an alternative scheme of payment of GST, and that is called as composition levy. So in composition levy, what happens is that you don't have to calculate tax in the normal way like we did in this example. So you won't take any ITC on any inputs, services, or capital goods. No ITC, forget that. So you don't have to maintain any records and documents. Government says do one thing: you have to just pay tax on your output, goods or service as the case may be, at a very small rate. Like government finds that you are paying 20 rupees to the government, so government's net earning is only 20 rupees on whatever sale price is there. So instead of that, instead of charging 120 and then reducing 100 and paying 20, they say okay, don't do this, pay a very small rate which will be equivalent to, not exactly same, but equivalent to this 20 rupees. So somewhere in the range of say 10 to 20 it will come. So you just pay this amount directly to the government on your sale price. Means, for example, if the sale price is say 1000 rupees, then I would pay at a very small rate of say 1%. How much is 1% of 1000? 10 rupees, right? 10 rupees, na? Yeah. So you pay 10 rupees directly to the government. So you don't claim ITC. Now see all the points, huh? No ITC on inputs or input services or capital goods, as the case may be. No ITC at all. And you have to pay just a percentage of your sale price. And this amount that you are paying here cannot be shown in your invoice. So your invoice will be of 1000 rupees only. And this 10 rupees at the rate of 1% you have to pay separately out of that 1000 to the government. So that's your inside information. It cannot be shown in the invoice, means this 10 rupees will not be allowed as credit to the buyer, means to the recipient. No ITC to recipient. Okay, so you cannot pass on this credit to the recipient. So this amount that you pay at the low rate is directly paid to the government. So you cannot take ITC of your inputs, and the next person in the chain cannot take credit of the tax that you have paid under composition scheme. Understood? So what happens here? You just calculate your turnover for the tax period and you pay that percentage, a small percentage. So you save money on accountant, you save money on the chartered accountant, and so on and so forth. So that is the basic purpose or the objective of the government behind this composition levy. Understood? So now let's see. Now you'll understand a lot of things here. Section 10. Notwithstanding anything to the contrary contained in this act. Notwithstanding means overriding effect. So this section 10 will override basically section 9. It overrides section 9. Section 9(1), that is the normal charging section, the forward charge. Okay, so section 10 overrides section 9(1). But it says, but subject to the provisions of subsection 3 and 4 of section 9. So subject to 3 and 4 of section 9 means subject to reverse charge. So composition levy does not apply in case where reverse charge applies. Okay, there is no composition levy for reverse charge. Composition levy is only for normal tax which the assessee has to pay himself, that is forward charge. So forward charge is overridden by composition levy, but reverse charge is not overridden by composition levy. Understand this point. Okay. So what that means, I'll tell you. It means that if this is a person, okay, and here are his outward supplies, and here are his inward supplies. So in case of any inward supply, if the RCM applies, if they are chargeable to RCM, then this person has to pay tax on these goods which are chargeable under RCM or services on full basis, means as per section 9(3) or 9(4). 9(3) or 9(4), as the case may be, will apply, and this is payable at the normal rate of tax. Whatever is the normal GST rate, you have to pay it. Okay, and on your outward supply you can opt for composition. Okay, now so I have used the new word opt. So that means that composition scheme is optional, right? It is not compulsory, it is optional. If you want to pay on normal method, you can pay on the normal method under section 9(1) by taking ITC and all. Okay, so this is your choice, not compulsion. So he can opt for composition levy on outward supply, but not in respect of inputs where RCM is applicable. there you have to pay tax at the normal rate of tax. And of course you cannot claim ITC. So therefore it says, subject to the provisions of 3 and 4 of section 9. A registered person whose aggregate turnover in the preceding financial year did not exceed 50 lakh rupees. So when in 2017 this GST acts were made, the limit was prescribed at 50 lakhs, but the proviso is also there. We'll see that proviso which says that the government can extend this amount, or you can say expand that amount from 50 lakhs up to 1.5 crores. Okay, and which they have done practically. So did not exceed 50 lakhs in the preceding financial year, may opt to pay. So this is optional section. Okay, may opt to pay in lieu of the tax payable by him under section 9(1). So as I told that this section 10 overrides section 9(1). So 9(1) is your forward charge on your outputs. So instead of paying the normal rate, you can opt to pay composition rate of tax. An amount calculated at such rate as may be prescribed. Prescribed by whom? Government in consultation with the council. But not exceeding means these are the maximum rates that can be prescribed by the government. Maximum rate is 1%, and this is for CGST. Okay, 1% is for CGST. So if you combine CGST and SGST, then it will become 2%. Okay, 1 plus 1, 2. So 1% of the turnover in a state or union territory in case of a manufacturer. So if you are a manufacturer person, you manufacture goods and sell them, then the maximum rate for you can be 1 CGST, 1 SGST, so total can become 2%. Then 2.5% of the turnover in a state or in union territory in case of person engaged in making supplies referred to in clause B of para 6 of schedule 2 means restaurant service. In case you are into restaurant or catering service, that is food supply service basically, and beverage, food and beverages, then your rate will be 2.5%. 2.5 plus 2.5 will become total 5%. And 0.5% of the turnover in state or union territory in case of other suppliers. So other suppliers means traders basically. Subject to such conditions and restrictions as may be prescribed. Okay, that's good. So 1, 2.5 and 0.5. Now these are the maximum, these are not the real rates, these are maximum that can be prescribed. What are the rates prescribed today? That we'll see in the rules. Okay, the actual rates are given in the rules. Provided that the government may by notification increase, as I told you, increase the said limit of 50 lakhs to such higher amount not exceeding 1.5 crores as may be recommended by the council. And this they have done. Practically today the limit is to 1.5 crores, and in some backward name, what we call them as special category states, it is less, it is 75 lakhs. So that also we'll see. So in some cases it is 75 lakhs, in some states it is 1.5 crores, but maximum can be 1.5 crores, not beyond that. And that too, how we'll see in the preceding financial year. Means if this is the current financial year and this was your preceding financial year, so if the turnover in the preceding financial year was below the limit, we'll see what is the limit for different states. So it was below the limit, then in the current financial year you can opt for composition levy, CL. You can opt for composition levy. And if in the last year your turnover had exceeded the limit, like whatever the limit may be, 1.5 crores, 75 lakhs, then you have to pay tax in the current year under section 9(1), and you cannot opt for composition levy under section 10. Okay, good. Then come back. So government can increase the limit from 50 lakhs to 1.5 crores on recommendation of the council, provided further that a person who opts to pay tax under clause A or B or C may supply services also. Because normally till 2018, or you can say up to 19, this section was only for goods, and only one service was covered, and that was restaurant service. Otherwise it is all goods. Okay, it is for goods. But from 2019 they have inserted this proviso which says that you may also supply services other than the restaurant of value not exceeding 10% of turnover in a state or union territory, or 5 lakhs, whichever is higher. Okay, provided further that a person who opts to pay the tax under clause A or B or C may supply services, means if you are into supply of goods and you also supply some services, a few, like for example you sell cars and you provide services also. What service? The servicing of the car, repair, maintenance, servicing. Okay, so in that case, earlier, that is before 2019, you are not entitled for composition scheme. So composition scheme was specifically for goods or for restaurant service. That's it. Purely goods. If you are a dealer of pure goods, you don't give any kind of service. Like for example, you have a small kirana shop, so you only sell goods, then you are entitled for composition scheme. Or if you are into restaurant or catering service, then you were entitled. But suppose if there is a dealer who sells goods and he also does repairs and maintenance, then he was not entitled to claim composition scheme. But now this proviso has been inserted and you are allowed to take composition scheme if your service turnover is very less. So you are predominantly selling goods and to some extent you are giving service also. So that limit is given here, 10% of turnover, total turnover, or 5 lakh, whichever is higher. So let me explain with a few examples. So suppose your turnover of goods and turnover of service, you are doing both goods as well as service. So your goods turnover is say 80 and your service turnover is 20, so your total comes to 100. So in 100 your limit would be, limit for service would be 10% of 100, means 10, or 5 lakhs, whichever is higher, means 10 lakhs. So your limit is 10, but as we can see your turnover of service is 20, it has exceeded the limit, means you are not entitled to opt for composition scheme. You cannot claim composition scheme, cannot opt under section 10. Okay, but take another example. If this is 95 and this is 5, so total is 100. Okay, limit would be same, 10% of 100 is 10, or 5, whichever is higher is 10. So 10 is your limit and your service turnover is 5, it is below 10, so then you can opt under section 10. So this facility of composition scheme is now made available to small dealers who also give some kind of service which is very low as compared to their total turnover. It is below 10% or 5 lakh, whichever is higher. Earlier it was not allowed, now it is allowed. So that's good. It's a welcome change. Okay. So this proviso was inserted by the Amendment Act which came in 2018. Then next point is the registered person shall be eligible to opt under subsection 1 if means conditions. A lot of conditions are there. Condition number 1, as I told you, save as otherwise provided in subsection 1. So save as provided means this. Okay, so to that extent it's fine, but otherwise he is not engaged in supply of services. Means up to this limit it's fine, but beyond that limit you are gone. So if your turnover of service exceeds that limit, then you cannot opt for composition scheme. Or if somebody is purely into services, Farooq Haque classes is purely into services, hence I cannot opt for composition scheme. Okay, so that means that basically composition scheme is for goods and not for services. But if a person is supplying goods predominantly and is also supplying services in a very small proportion below this limit, then he can opt, then it is fine. Understood? First point. Secondly, he is not engaged in making any supply of goods which are not leviable to tax under this act. Means he cannot supply any goods which are not leviable, like he cannot supply liquor for human consumption, because he is supplying liquor which is not leviable, then he is out of this scheme. He cannot opt for composition scheme. Then he is not engaged in making any interstate stop. I'll go back to clause B and clear one doubt. What if a person is supplying exempt goods and taxable goods? Exempt goods. Exempt means as per the exemption notification. So if you're supplying any goods which are exempt and also goods which are taxable, can you opt for composition scheme? Answer is yes. You are allowed to supply exempt goods, that is fine. But you are not allowed to supply goods which are not leviable. So hence this word not leviable is important. Exempt is fine. If you are supplying exempt as well as taxable goods, that is fine. You can opt for composition scheme. But if you are supplying non-leviable goods, non-leviable means that schedule 3 goods or the alcoholic liquor on which there is no GST, then you are not entitled for composition scheme. Okay. Then next point is not engaged in making any interstate outward supply of goods. Another point, you cannot make interstate supply. Your complete turnover is should be only intrastate. It's simple now. This facility is only in CGST and SGST. It is not in IGST. Okay, so your turnover has to be intrastate only. Now one point is that can you have offices in multiple states? Yes, that's fine. You can have your shops in multiple states, but from each shop you can sell only intrastate. There should not be any interstate supply. Okay, like I have a pan shop. I've got pan shop in 15 states. That's fine. But do I sell my pans interstate? No. I sell pan to customers who come to my shop and they consume it then and there. So all my sales from each of these shops is intrastate. Intrastate Maharashtra, intrastate Sikkim, intrastate West Bengal, intrastate Delhi. They are all intrastate. I have multiple branches in multiple states, but all of them sell intrastate. Then yes, I can opt for composition scheme. I am allowed. Okay, but if I make interstate, then I am not allowed. Understood? Good. Next, he is not engaged in making any supply of goods through an electronic commerce operator who is required to collect tax under section 52. If I am selling through an eco who is required to collect tax under section 52. This we'll see when the time comes. So right now just remember this point, that if you are supplying through eco, this is for goods, not for services. We are talking about goods, and some of the goods are covered under section 52. The electronic commerce operator has to collect tax at source. So in that case we cannot come under composition scheme, because when TDS applies, then full rate applies and not concessional rate. TCS, I mean to say, not TDS. Did I say TDS? No, it's TCS, collection of tax at source. Then he is not a manufacturer of such goods as may be notified by the government on recommendation of the council. So there are certain negative goods. If you manufacture these goods, then you cannot come under composition levy. So what are these negative goods? We'll see the list. Okay, so wait for some time. Ice cream will come in that. Ice cream, tobacco, cigarettes, etc. Then, provided that where more than one registered persons are having the same PAN. This is that example I told you now, that I can have multiple branches in multiple states. So they will all be registered with the same PAN. So I have got multiple registrations with same PAN. Okay. The registered person shall not be eligible to opt for composition scheme unless all such registered persons opt to pay tax under that subsection. Means if I have got 15 branches in 15 states, all having registration numbers separately but with the same PAN, because I have to quote my PAN. So in Maharashtra, my registration GST number will come by using my PAN number. In West Bengal, I will get a separate registration number in GST but using the same PAN number. Okay, so these are called as distinct persons. So in this case, I cannot opt for composition scheme on piecemeal basis. Means I will say that okay, out of 15 registrations, in 3 states I will pay tax on composition scheme and at the remaining places under normal method. No, not allowed. So either you pay normal tax for all your branches, or you opt for composition scheme for all the branches, all your registrations. Okay, so that is also simple. Then subsection 3 says that the option availed of by the registered person under subsection 1 shall lapse with effect from the day on which his aggregate turnover during the financial year exceeds the limit specified in subsection 1. So what does it say? It says that this was your preceding year, PF5, preceding financial year, where your turnover was less than the limit. Good. So in the current year, CFY, current financial year, you opt for composition scheme. But slowly and steadily as the year progresses, a day comes when your turnover crosses the limit. Say for example, if the limit is 1.5 crores. So your limit crosses 1.5 crores at some point during the current year. So now what will happen? From the 1st April to this date, you are paying tax on composition basis, right? But as soon as your turnover will cross the limit, you will have to start paying tax on normal basis. So for the remaining part of the year, you have to pay tax on normal basis. That is section 9(1) at full rate. And then you can take credits also, ITC. Understood? Good. So the benefit of composition levy is available only till your turnover reaches that threshold point, the cutoff limit. Then subsection 4 says that a taxable person to whom the provisions of 1 apply shall not collect any tax from the recipient. As I told you, you cannot show this tax amount in your invoice and you cannot collect it from the buyer. The funda is that the buyer should not come to know how much tax you have paid to the government, so you cannot write it in your invoice. You cannot write it separately. In normal invoices we see that GST amount is written separately, right? And we pay it to the supplier. We the recipients pay it to the supplier, means supplier collects it from the recipient. But in composition that cannot happen. The reason is you cannot show the amount separately in the invoice because the other person, the recipient, cannot take credit. Credit is not allowed to the recipient. Therefore, you cannot show it separately. You cannot recover the amount separately. So you have to just show the sale price. That's it. So you cannot collect the tax from the recipient separately. Okay? Nor shall he be entitled to any credit of input tax. No credit will be allowed for input tax. So if you don't show it now, you don't show it separately, so the recipient is not going to take any input tax credit. And lastly, it says if the proper officer has reasons to believe that a taxable person has paid tax under subsection 1 despite not being eligible. You are not eligible for this scheme, but still you paid tax on composition basis, then what will happen? Such person shall, in addition to any tax that may be payable by him under any provisions of the Act, means section 9(1), be also liable to penalty, and the provisions of section 73 and 74 shall mutatis mutandis apply for determination of tax and penalty. These two sections we'll see later on. They are very interesting sections. They are recovery sections. Recovery of tax. We'll see them when the time comes. Okay, so these sections will be applied and the tax will be recovered from you, and you will also be penalized. You will also be penalized. You cannot say that I have already paid tax, so why the penalty? So wrong tax is equal to no tax. So penalties are liable. Okay. Then the rules are given. So first is rule 3 of the CGST rules. This is of no use. This only gives the form numbers that you have to use. So just remember the form numbers. It says any person who has been granted registration on a provisional basis under Rule 24 and who opts to pay tax under Section 10 shall electronically file an intimation in CMP1, GST CMP1 prior to the appointed date but not later than 30 days. These are talking about people who were covered by the old service tax and excise laws and they migrated to the GST law. So from the date of migration they can opt for composition scheme, but not later than 30 days after the said date. You can forget this, it will not come in the exam. They don't ask form numbers and all in the exam, right? So, and secondly, the person who applies for registration, it's a fresh registration, may also give the details and all these points, what details you have to give, which form you have to use. All these things are of no use, so you can just forget them. Then effective date of composition levy, rule 4 is there. So this is also of no use. Normally it just, you have to remember that it is effective from 1st of April of the financial year. Directly come to rule number 5. This is important. So question will come on rule 5. The person exercising the option to pay tax under section 10 shall comply with the following conditions. These are conditions. So question will come on conditions. He is neither a casual taxable person nor a non-resident taxable person. Casual taxable person is a person who moves to another state and sells goods for some time, 10 days, 15 days, and then comes back. So he cannot opt for composition scheme. If you are a CTP or NRTP, non-resident taxable person, non-resident who comes down to India for selling goods for some time and then he leaves, so he doesn't have a permanent registration. These are temporary registrations that you get for selling goods within that short time. So these people cannot opt for composition schemes. Then the goods held in stock by him on the appointed day have not been purchased, should not have been purchased in the course of interstate trade or commerce. Means your inputs should not be purchased in the course of interstate trade or commerce, or imported from a place outside India. You should not use any imported goods, or received from his branch situated outside the state, or from his agent or principal outside the state, where the option is exercised under sub-rule 1 of rule 3. This is the case of migrated people, and that migration has now ended. It was applicable in 2017, so now it is of no use. So clause B you can forget. Okay. Then C, the goods held in stock by him have not been purchased from an unregistered supplier, and where purchased he pays tax under 9(4) for the notified goods, okay, which are covered by 9(4). So you should not have purchased goods from unregistered dealers. If you buy your inputs from unregistered dealers, then you cannot opt for composition scheme unless you have paid tax on reverse charge. Then he shall pay tax under subsection 3 and 4 of 9 on inward supplies of goods or service or both. This is important point. This we have seen. I have explained it to you that if you have purchases which are chargeable under reverse charge 9(3) and 9(4), that tax you have to pay separately, okay, under normal method. Then he was not engaged in manufacture of goods as notified in clause E of subsection 2 of section 10 during the preceding financial year, as we saw in subsection 10(2). Then he shall mention the words composition taxable person not eligible to collect tax on supplies. These words have to come on his invoice or the bill of supply. They will issue bill of supply, not tax invoice, okay, and they will mention these words composition taxable person not eligible to collect tax on supplies. You have to mention these words on top of your invoice, and then you cannot show the amount of tax separately in the invoice. You cannot collect it from the buyer. And he shall mention the words composition taxable person on every notice or signboard displayed at a prominent place in his principal office of business and at every additional place or places of business. So he has to mention that in all his places of business that he is a composition taxable person, so that the buyers in his shop should know that this person cannot collect tax separately from us. And the registered person paying tax under section 10 may not file a fresh intimation every year, and he may continue to pay tax under this said section subject to provisions of the acts and rules. Means you don't have to file a declaration every year. If you comply with the norms and the limits, then you can continue to pay on composition levy. You don't have to file your declarations every year. Then validity. This is also of no use, but okay. Option exercised by a registered person to pay tax under section 10 shall remain valid so long as he satisfies all the conditions, okay. And the person referred to under sub rule 1 shall be liable to pay tax under 9(1), that is normal method, from the day he ceases to satisfy the conditions of section 10. So if you are out of section 10 by not fulfilling all the conditions, then you have to pay tax under normal scheme, okay. And shall issue tax invoice, then he will start issuing tax invoice for every taxable supply made thereafter, and he shall also file an intimation for withdrawal from the scheme in CMP 4 within 7 days of the occurrence of such event. So this is a form that you will have to file that you are now out of the composition levy and under normal scheme. That's okay. And point number 3 says that a registered person who intends to withdraw from this composition scheme, even though you have not violated any provisions, but still you can opt out. You have a choice to opt out. So you have to also give the declaration in CMP4, and you can opt out from any day. Any day you can opt out and start paying tax on the normal scheme. And 4 says that where the proper officer has reasons to believe that the registered person was not eligible to pay tax under section 10 or has contravened the provisions, he may issue a notice to such person in CMP 5 to show cause within 15 days of the receipt of the notice as to why the option shall not be denied. This is the action that will be taken against you. And then upon receipt of the reply to show cause from the registered person in CMP 6, means a reply will come in CMP 6, the officer shall issue an order under CMP 7 within a period of 30 days, either accepting the reply or denying the option. So now two actions can be taken. Either you continue, if the fault is not found, you will continue, or if the fault is found, then you will be withdrawn from the scheme. So that order is given in CMP 7. And every person who has furnished an intimation under 2 and filed an application, so on and so forth, electronic, that is of no use. You have to give the stock statement and all in ITC 1. May electronically furnish on the common portal ITC 1. This you will understand in ITC chapter, so I am leaving it right now. You can leave it right now. You will not understand anything right now. And so those are all the finer points, nothing much. Then you have to just remember rule 7, the actual rates of composition tax. So the actual rates are given here. Manufacturers other than manufacturers of such goods as may be notified, means the negative goods, the ice creams and tobacco, 0.5% of turnover in a state or union territory. The maximum prescribed in the section was 1% for them, but right now government has levied 0.5%. Maximum is 1, but they have levied 0.5. So this is 0.5. So if you add 0.5 plus 0.5 CGST, then total would become 1%. The total of CGST and SGST or UTGST will become 1% for manufacturers. Then for restaurants, paragraph 6 of schedule 2 clause B means restaurants and caterers, it is 2.5. Even the maximum was 2.5, the prescribed is also 2.5. So it will become 2.5 plus 2.5, total 5%. And any other supplier, that is basically the traders, the trading community, would have 0.5%, means 0.5 plus 0.5, maximum 1%. Not maximum, the actual rate is also 1%. So these you have to remember, the actual rates. And then notification 14/19 is given regarding the turnover. So what is the turnover in which states? So this you have to remember. So the turnovers which are notified here are for Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura and Himachal Pradesh. The limit is 75 lakhs. The turnover that you have to see in the preceding year, if it is less than 75, then this year you can opt for composition scheme up to the turnover of 75 lakhs. And for all other states and union territories, it is 1.5 crores. And last point which is given there is the goods which are not entitled. As I told you, ice cream, all kinds of ice creams and other edible ice products, whatever ice products they may be. Then pan masala, pan parag, pan masala, and all goods that is tobacco and manufactured tobacco substitutes, means cigarettes, cigars and all those. So these goods are not entitled. If you manufacture them, you are not entitled to claim composition scheme. Great. Here we'll end the lecture, and this notification which is given here 2/19, this is similar to composition scheme, but this is a concessional exemption notification, or you can say partial exemption notification. It is a partial exemption notification. So we'll study this in the chapter of exemptions. There are a lot of exemptions that we are going to see, and in that I will also explain notification number 2. Great.